Let's bring in our market panel. Joining us now is Barbara Doran of BD8 Capital Partners and Scott Wren of Wells Fargo Investment Institute. Good afternoon to you both. Scott, I'll start with you because you've been cautious on the market and you've talked about defensive posturing where equities are concerned in general. I mean, we just saw a roughly 70 basis point move in the 10-year Treasury yield lower since the end of October. And yes, we saw a voraciously fast move higher ahead of that. But if we continue to see this move lower in yields, how positive is that to equities, at least here in the near term?
Well, I mean, I think, Morgan, certainly the stock market's reacting to positive yields. And as far as the equity market goes, I think the S&P 500, we're at the top of the end of the range now. I think today, clearly we're bumping against the July highs. And I would argue probably, the technical resistance is really more up at 46.30. So from today's highs up to 46.30, I think that's going to be a tough road to hoe to get up above that because really the next stop is the record high. But these yields, I would say, we've had a 4 to 4.5 year-end range. We actually think at the end of next year, rates will be closer to 5% because we expect a recovery in the back half of the year. But, your previous guest talked about normalization, and there's a lot of that going on. And, if you think historically, I mean, 4.5%, 5%, 4 to 5% 10-year yield, I mean, that's nothing to get worked up about. It's a lot higher than it was 2 years ago, but certainly not, some death knell for the stock market.
Yeah, I do want to note that we have blue chip Salesforce. Those results are out. We're going through the numbers. We're going to bring those to our viewers as soon as we can. In the meantime, Barb, the Waller comments perceived as pretty dovish yesterday, really helping to move the markets, both the bond and the stock markets here this week. But I want to play a soundbite from Barkin, who was here at the CFO Council and spoke to our Steve Leisman earlier today. Take a listen.
If you believe, as I believe, that inflation is going to be stubborner than I would like it to be, then I think talking about reducing rates at this point is just premature.
All right, so that was Fed President Tom Barkin. Barb, I want to get your thoughts on that because you could argue that we're starting to see a divergence in terms of how different Fed officials are viewing this hiking cycle, where we're at in it, and what that's going to mean to actual cuts next year at a time where the market's aggressively pricing that in.
Yeah, well, I think you're going to see a divergence of opinion as we have all along. I think when you heard Powell at the last Fed meeting, he said they've pretty much got it right. And so I think that I would discount his comments. I mean, I think the market is clearly telling us the Fed is done hiking rates. And right now, the market is the Fed funds futures are discounting about a full percentage point cut. And in fact, if you look at June, the probabilities are about 92% for a cut. And in March, it's already up to 44%. So I think that you look at all the economic slowing and wages and jobs, that sort of thing. I think that there is, it's clear that things are slowing. And inflation is coming down. And you saw this morning, with the revised third quarter GDP, showed real growth and real productivity and a slight drop in the core pricing inflation. So we're going to see tomorrow when we get inflation numbers in.